Right, this is another powerful conceptualization where I want to draw a picture in your mind how materiality standard works and how it can be applied as a part of overall audit strategy from audit perspective for auditor to form an opinion, as well as when auditor is planning the audit, how materiality level can be used. And one thing that you need to know, right, because when we talk about auditing, we can't talk auditing without discussing financial reporting, because what audit is auditing is financial statements, like I mentioned to you in my very first introductory session. If you take set of financial statements, that these financial statements need to be prepared based on SLFRSs and LKSs, right? One of the fundamental accounting standard is LKS 1, which talks about presentation of financial statements, right? So this materiality concept is defined not in auditing standard but in accounting standard LKS 1, and very recently, after many years, this definition has changed. I will show you that new definition as well. So before I do this conceptualization, I want to remind you, if you take set of financial statements, let us say one item called property, plant and equipment, right, is overstated, one assertion called valuation, and this company is not now earning. There are set of machineries, let's say this is a power plant, and due to some technical issues the power plant is not working now for some period, it's not generating assets, right? Or that may be one situation. The other situation is, okay, the power generation has come down due to various reasons, and you do a impairment assessment. As you know, it's based on the carrying value and the recoverable value. So the carrying value, let's say, is 50 million, and then the recoverable value, which we established based on either value, higher of value in use, or fair value less cost of disposal, right? So based on that, you select this is only about 20 million, and now there is a 30 million impairment. The question is, let's say the management doesn't want to pass this adjustment. As a result, the profit which is reported 100 million, right, the profit before tax, and the management says, you know, they haven't adjusted the impairment, but in auditor's assessment, impairment is going to be about 30 million, and now you know this is about 30% of the profit, this 30 million. So the question to ask, is this material? So that is where the first thing that you should learn is definition of materiality. Please remember and register this in your mind when you want to become a chartered accountant, that very often any conversation with anybody, you may be audit partner or anybody, you will always use this concept, this is not material. Now, is there a formula to calculate materiality? That, okay, what percentage? I use 30% here. Remember, purposely, even auditing standards or accounting standards, they haven't given a formula, because that is the power of professional judgment based on the level of experience and maturity, that auditor or accountant can say, oh, this is not material because it's not going to affect my economic decision. The user is not going to care. Right? When anybody is going to, now when I say economic decision, when bank is going to give a loan to the company, if they know that the actual profit should be not 100 million but 70 million, now is that significant to change their economic decision to give a loan to invest in a company from investor's perspective? Definitely, this is 30%. Now, but more than a figure, our key word for materiality is, right, if there is, remember now, register this definition in your mind, if there is omission, note the word omission, right, which means, okay, what I explained to you now is a misstatement, right? Omission, no, misstatement. Now, why misstatement? PPE 100 million, but it should be 70 million. It's a misstatement. Now, omission is what? Something which has to be included, not included. Now, let's say there is a contingent liability that company is likely to, there is a possibility, not like possibility, possibility to, this case company will lose, and as a result company has to pay, but still the amount is not sure, right? It's not probable but possible, right? So that is a contingent liability, but they don't want to disclose. Now that omission, oh my, this 30 million adjustment, right? Or new standard, use another word, omission. When I say new standard, now I am referring to L case 1. That is where materiality originates. Omission or misstatement, all the standards simply say if there is omission, contingent liability is not there, or a misstatement which is going to affect if you take a user, say banker or an investor, and that user's economic decision, right? If economic decisions are going to be affected, that is material. Economic decisions of the users taken on the basis of financial statements, right? I haven't written a full word here. I'm doing this writing very fast, so sometimes I don't write the full word, but this is omission, this is misstatement, right? So what is the definition of materiality, right? Information is material if omission means not included, or misstatement, overstatement is going to affect economic decision of users, and that is material, right? Then the other question is, new standard has added another word, obscuring. What is the meaning of this? This is like, hiding something. Sometimes management wants, they have some, even contingent liability legal case provision. Now they have had, now there is a liability, this is a serious court case, right? Company has violated some law, they are now making a provision. The provision is material. Now why material, you will ask? That is now in this case 10 million. Or let's say even 5 million, right? Now this 5 million, now it's 5% of profit, because profit is 100 million. This 5 million they don't want to show separately in the accounts, because now attention will go if we put separately what the provision is. They want to club this together with other liabilities and show, add in other liabilities 60 million, out of the 60 million, 5 million also included. Now that is kind of obscuring, because you don't want to purposely want to hide this somewhere. So omission, misstatement, obscuring is going to affect economic decision of users. That's material. So next fundamental question to you, how do we decide materiality level? Is it based on the size only? Is it based on the size only? Now if I go by size, this is 30% material. But I am saying you, now in this case 5 million is 5%. Right? Even if I tell you this legal case is very sensitive case, now let's say this figure is 3 million, now it is 3%. Now, if somebody wants to say, we have anything above 5% of the profit is material, if somebody is telling 5% of the profit is material, we have to disagree. Why? There can be some misstatement like this, 3% of the legal case liability where users' attention will go, this company is violating law. So there it is material by nature. So remember, another big learning point when you look at materiality, we have to look at both size of there as well as nature of the circumstances in which it has taken place. In this case, company is violating law, and as a result there is a provision, so user will draw particular attention to that, and that is also material. So what is your second learning point? Materiality determination has to come from the size as well as nature of the error judge. And now we can start drawing this fantastic analogy, right? When I say analogy, what is the meaning of analogy? So I draw something and explain that, connecting that to the materiality level. Now for example, when I do ethics session, I draw a house and explain to you, in this house, right, what is the foundation, what is the roof? That is an analogy or metaphor, right? Now this metaphor, now materiality is kind of, I see materiality as a filtering process. You start, now the filtering process at high level, there is a big issue, and then when you look at narrowing down, there are small misstatements. So there will be smaller one, little higher one, significant one, change the opinion. Now that is how I am going to put this down. So please draw with this with me. This will cover even auditing standard almost all. and very powerful, one page or half a page diagram for you. It is going to be like a filter. So please draw with me, right? So this is how I start. I'll use here black color to begin with. Okay, this is my filtration process, and at the start, and now this will go down like this, narrowing down to say when it comes to a certain level, I might say this part is, now I am writing one word here which is a very powerful word from auditing standard, trivial. This is trivial, right? Trivial meaning clearly insignificant. Even you can look up the dictionary. When you say trivial, ignore, don't bother, waste your time. This company is dealing with millions. You are talking about 50,000 error. 50,000 is nothing. Don't even talk to me about 50,000 error. That is called trivial. Trivial means clearly insignificant. Trivial means clearly insignificant. So so in an audit, right, or in accounts, when an audit is done, there will be 10,000 error, 20,000, 30,000 for this company. Forget, right, because their profit, let's say 100 million, 50,000, we don't bother. So then what is this level? I marked as trivial. Now I want to draw some boundaries here, right, and to say that materiality explanation, I will write keywords in red color. We know what is material, right? Based on the size, it's material, and then some material based on the nature, right? Please write example, right? Size means you can say obviously something like 10% of profit is material, right? I mean, that's usually established. 5 to 10% of the profit is material. You will come, we will discuss this. Why? The nature is, let's say, law, something to do with laws and regulation, violation, right? Or sensitive matter. So the key point is, right, we are looking omission or a misstatement which is going to affect economic decision. And remember, new standard LKS 1 used the word economic decision of primary users of general purpose financial statement. So I am writing that also, primary users, right? What are primary users? The shareholders, bankers, investors, right? Primary users of, we are usually talking about general financial statement, general purpose financial statement, right? Now that is material. Now I'm looking now from what, because this is, we are discussing, this is not 300 standard, this is 320, right? Now here I am looking this from audit. Now what I am going to put down here, auditing standard, but remember this definition is coming from LKS 1, right, and the same explanation is referred to in auditing standard. Now in my filtering process, the first activity, if you take audit plan in perspective, right, I am writing here something called overall audit strategy. So in an audit, auditor will establish overall audit strategy, right, as to how this audit should be approached, right? When we say the word overall audit strategy, at high level, auditor is thinking about how should I include or exclude certain areas, whether they have branches, other countries, the currencies, the scope in aspect, and what are the areas that require more attention. If it is a bank loan, is area that need more attention. Now to decide whether it is more attention or not, auditor also wants to know the materiality, and that is why especially I put a strict mark for direction. Auditor is using materiality. right, scope in direction, and also auditor is deciding timing of the audit, whether to do the interim audit, final audit, and auditor is allocating people, resources, resourcing. Now these type of things in an audit, before auditing account balances, audit partner is deciding. Our approach to this audit, bank audit, is to look at the control and do some limited substantive procedure and use analytics. Like that, audit is planning at high level. But this is not an account balance level plan, a high level strategy. Now you have to know the word overall audit strategy. Now if I ask you, when you study, you will have a strategy and a plan. Your part of your overall audit strategy is not to attend physical classes, for example, let's say, but some people would love. That's fine, that's your choice. But I am saying your strategy is, I am wherever possible doing a self-study. That's my strategy, right? Okay, now self-study in what areas, what detail, that will go to the plan. So remember, in auditing, there are two things. One is OAS, overall audit strategy. What is our approach? Our approach at high level is to do control, testing, limited, substantive. This is how we allocate people. This is our materiality level, things like that. So my key point is, remember, materiality is a part of overall audit strategy, and that is why we are discussing. I gave a brief introduction about overall audit strategy as well now. So at this stage, audit is going to decide, right, two important materiality levels, right? So that's very sharp technical point. You have to note carefully, right? These two, again, I can write in red. One is called materiality level. I write ML for financial statement as a whole, for financial statements as a whole, right? So this, another word for this is called overall materiality, overall materiality level. So OML. So there is something called OML, overall materiality level. So that is for the whole financial statement, right? But okay, let's say if I quickly tell you 5% of profit can be overall materiality level, it's applicable to any item in the account set. But we know what is 5% now in our mind. For the purpose of this example, I take profit before tax as 100 million, as I said earlier. And if you say that my overall materiality level is 5% of profit before tax, and that's going to be that is going to be 5 million. So that 5 million is applied to any item in the accounts, debtors, creditors, my overall. If I said at high level, right, this is where if there is a misstatement in property, plant and equipment earlier, it is 30 million. Now that 30 million misstatement may result in, now here I am writing in red color, this materiality level that we are talking is affecting. If there is a material misstatement at that level, auditor may even modify the audit report, right? Modify the audit report. But remember, before modifying, there is another auditing standard called evaluating misstatement. After evaluation, auditor may decide to modify the audit report because there is a misstatement of 30 million. The 30 million is 30% of the profit and therefore material. So that is, audit report is going to be modified. Now that is that level of significant materiality level. But however, auditing standard also says when you have your overall audit strategy, you can have one materiality level like this for overall, but remember, one size doesn't fit for all. When I say that, one size, what is my one size? My one size is 5% of profit, that is 5 million. 5 million doesn't fit all because 5 million is fitting only this size definition. I have to think there can be areas in the financial statement which may be 1 million, but still it is material. And those are called, please write carefully, right? Those are called materiality level for particular. So the key word here is particular. Particular account balances stroke classes of transaction. statements or disclosures. Now the key word to highlight here is particular materiality levels. So the particular materiality level, and then there is another level called OML, right? So then you will have during next 10 minutes you will understand this much better, right? When I give you specific example about both side like this. So I am now going to explain to you, right? Divide this into two like this. First of all, to ask this question, okay, how should I decide overall materiality level? So usually auditors are taking as a benchmark. Benchmark means as a base. Auditor may decide, if I write outside of this, if it is profit before tax, what should be the percentage? Now these things also in the exam point of view, you have to at least remember, usually I already said 5 to 10% of the profit before tax is material. And then if it is revenue, now can we use, in my example, 100 million is the profit and 5% is 5 million. But if it is revenue is much bigger figure than 100 million. Now in this company, revenue may be, let's say, revenue can be 1 billion. Right, now that revenue is that big, right, obviously. So if I am using 1 billion, then I am not using 5%, I am using a smaller percentage than revenue. So usually if we take revenue, the benchmark which is usually used is 0.5 to 0.5%, right? 0.5 to 1%. And for the easiness, you can at the same time write, even if it is gross profit, if you use gross profit as a basis, we still use same percentage, 0.5 to 1%. Now these are consistent with study pack, and remember, in practice different audit firms will have different ranges, but these are broadly common. There may be slight variation. Now the question is, you can also use asset. If you use total asset for materiality calculation, asset is again huge base. Usually it's 1% to 2%, and if it is net asset, 2 to 5%. Now these same percentages you can see in study text, and there may be slight variation, but broadly same. But then why I put a box here to say that if you are given an exam question and if you have been asked to suggest a materiality level, are you going to select profit or revenue or gross profit or asset or what? There is a thought process. Thought process means what is the basis of thinking. So there is a thought process behind for practitioner to say that this company better to take profit. This company don't take profit because last year there is a profit, this year there is a loss. Then better to use asset as a base. Likewise, there are criteria that we need to look at in selecting whether it is profit, revenue. So the point that I am going to write here is very, very important. Those are the criteria. After writing, I will explain to you these 5 criteria. So one is, if you want explanation, please write as a note. One is elements. Now what do you mean by elements? Elements of financial statements. Number 2, right? Number 2, what are the areas that require user attention or user focus, right? User focus items in the financial statements. User focus items. I will explain one by one. Third one, nature of the entity. What is the type of business they are in, right? And nature of the entity, industry. What the industry they are in. Like bank, how do you decide materiality level? Maybe a little different. And fourth one, ownership structure of that company. If you want, please put a note or write within bracket, is it mostly debt driven company or debt to equity balance company or what? And the last one you can write, very important in the exam, is there a volatility? Last year there is a loss, this year there is a profit, fluctuation, right? volatility. Right, now these are very important. I recommend you to put a note and write how to apply this, right? Note 1. Right, now remember, in many organizations, if profit is not fluctuating, in anybody is interested in a business, what is the bottom line? What is there for me, right? For shareholders to distribute. So everybody is usually interested in profit. So even in exam point of view, in a materiality question, the first choice goes to this. First choice, right? And the elements of financial statement means this answer. If you are using profit, it's the range like this. Elements means these are the elements, right? If it is revenue, what it is. What elements we are looking? Usually when we refer to elements, the word elements means, right, there are 5 elements in accounts: asset, liability, equity, 3 elements in the balance sheet, income and expenses, right? As you know now, if it is asset based calculation, we know percentage to be looked at. So based on the elements, if it is income based, or now some companies are there, you will select expenses for materiality level. Now I can also write expenses. Now if you take NGO and they have expenses, right, you can, there's nothing wrong in taking a percentage of expenses as well, right? So elements means these elements. User focus items, can you write example below in your note? User focus item is now discontinued operation. Now in a company, suddenly they have closed one branch and that branch total asset is 10 million. Now this company's total profit is 100 million, but now this user focus item is a discontinued operation, right? So there you have to decide, to consider that also in your materiality, right? There are certain areas that you may have to decide separate materiality level, and that is where actually we have this particular materiality level as well. The other famous point is, let me to explain the easiest one. Elements I explained to you. The easiest one in the exam, last year there is a profit. Please write here loss. Sometimes previous year there is a loss, current year there is a profit. Or else last year there is a profit of 9 million and suddenly 9 million has become 1 million. It's so volatile, right? So if there is a volatility, profit is not a proper basis. Maybe you can shift from profit to revenue. So another variable is volatility. Now you know volatility means fluctuating variable, don't take. If profit is fluctuating, take the revenue. The other one is nature of the entity or industry. You know, there are many businesses, while the focus is on the profit, there are some businesses the asset value really matters. Say unit trust. So there is lot of focus on what is the net asset value. So they are very sensitive to see if there is error, what is the percentage of the portfolio. Now if it is a unit trust or a bank, the way we look at materiality probably from net asset point of view, right? There's a lot of attention. Even in a bank, you know, the asset is very important from capital adequacy ratios to various other things. That's why based on the industry, certain items are more significant. So ownership, please write example, if it is a debt driven company, there are a lot of debt. Now see, they have taken a lot of bank loan. For that purpose, users are more interested what is their total asset, because debt you have to recover from the asset. So if it is an ownership debt driven company, asset is more appropriate, like that. And then another thing is, you know, user focus item. You know, some companies, they are very keen on revenue. Let's say the revenue targets, senior management get revenue targets, bonus scheme. So revenue is a key measure. So then you may decide this revenue. To simplify for exam point of view, if you judge in the exam paper whether something is material, your simple calculation is check the percentage of PBT. If they ask you to advise on a materiality level calculation for some question, then you will have to see if there is a fluctuation, don't use the profit. Next choice may be revenue. There are some questions, right, you may have to give, you can actually give both from profit angle this, balance sheet angle this. So like that. But as a simple measure, you can always for exam purpose use this, but be mindful, these other variables are also possible. So this what you learn now is called materiality level for OML is what we learn now. So I put a tick mark and you have some understanding about OML. So in our example, OML is 100 million. I am using 100 million profit before tax, and the OML is 5%. Therefore, it's 5 million. However, I know that every item I can't use 5 million, because now that is where I'm going to write again something here. When there are specific items, I may have to have a lower materiality level than revenue. So now 3 things to write. One is loss and regulation. There are, if it is a bank, if there is error, even if it is 100,000, right, it can be material. So auditor will purposely set a very lower threshold like 100,000, right, for laws and regulation related matters. And then there are things which are key disclosures in the financial statement. Now take for example the EPS, right, even a little change, serious implication, right? And there are other disclosures, like I said, contingent liabilities. And then thirdly, there are areas where attention of users are required. So especially I took the example of, again, contingent liability disclosure, right? Let's take not contingent liability. I took another example to you, discontinued operation. Right, now that requires more attention. The discontinued operation total asset base is 100 million. And you may decide to take even, for example, if you want to see whether there is any error, even 1% can be material in this. Right, so that is where there is, even at overall financial statement level, a very good example to give for key disclosures related party transaction. Because of the risk with related party transaction, auditor will again set a very low material level, like even 100,000 things that matters to us. So like that, accounting policy change. Now those can go under particular material level. Now you have to really understand this point. So at the overall audit strategy, auditor can have 5 million as well as some low material level, right, for certain specific items that are required by law or disclosure attention. And that is OML. And now we are coming to the next big material level, and that is, if this is one, the next part is called PM, right? Now PM is not Prime Minister, this PM is performance materiality levels. So please write it. Again, you have to understand this concept of performance materiality. Now what is performance materiality level? Now usually there is a rationale why we are using a performance materiality level. I will explain to you. But I want to say, first of all, when this is used from audit point of view, at the start I already mentioned, performance materiality level is used in the risk assessment process, which items we have to focus as high risk areas, as well as in determining, right, what? Now in auditing there are only 2 things, RAP, risk assessment procedure, RAP. What is the other one? For example, revenue is a risk. So then what are we going to do to audit revenue? So that is called FAP, determining 3 things, nature, timing and extent of further audit procedures, FAP. And this is performance materiality level. Now please write a big note, because you need to really understand what this FAP, what this performance materiality level means. Now it's very, very important to understand. Now one other thing, you can write a note here, right, PM, performance materiality level. Now one thing, why, as a rule, always performance materiality level is set, right, lower than overall materiality level. So my overall materiality level is 5 million, and I may decide to take haircut, cut 20%, which means 80% of OML I am going to set as what? performance materiality level that I can use in the audit plan in process. And here, if this is overall audit strategy, here you can write this is going to be audit plan. This is going to be audit plan. Now, audit planning means usually both overall audit strategy. If you take from auditing point of view, put in both together is called audit plan, right? Audit plan has two things I mentioned at the start, overall audit strategy and a audit plan. So, audit plan has these two things, right? So, audit plan is covered under Sri Lanka Auditing Standard 300, right? So, I was here, performance materiality level is set at a lower level than the overall materiality level. Now, in my example, I took 80%, right? 80% of 5 million, right? So, 80% of 5 million is 4 million. So, now my performance materiality level is 4 million. So, I am writing here, it's 4 million. So, then why I have 1 million? And that 1 million, I can explain this 1 million as margin, right? It's like you have heard this word, right? Margin of safety, it's my margin for error, margin of safety. Why this is used as margin of safety by auditor? Let me to take a very simple example. In the exam, what is your cutoff mark if you want to pass an examination, right? Your cutoff mark is 50 and there is one student, lazy student, and he will study, he is missing lot of sessions and trying to identify some session to somehow get 50. So, this student is studying only for 50 and there is a greater chance this student can fail because he has excluded something. Those things can come in the exam, right? The things which he excluded can come in the exam, and things he studied also he may not properly study. Therefore, the one who is preparing for 50 marks, there is a greater chance that he will not get 50 and fail the exam. Therefore, likewise, while auditor has set 5 million as the overall materiality level, there is a possibility that auditor will, number one, there are two possibilities, please write. One is there can be undetected errors, right? Now see, the idea is if auditor is only going to directly use 5 million and ignore everything below 5 million, so there is a chance auditor will miss. So auditor is setting another lower level called 4 million in audit testing, so that even auditor is going to miss anything, still there is another 1 million chance, because your opinion is going to be changed only after 5 million. So auditor is having a buffer, you know, there is a chance that I may miss something, that's called undetected, right? And also in an audit there will be lot of uncorrected things, right? That can be significant. So there is always a room for uncorrected errors. There may be errors which company will not correct. So there are little errors, but auditor can still say I am okay up to 5 million. So auditor is, you know, this can be tested in a question, right? What is the rationale for setting performance materiality level at a lower level? Now remember my exam question, right? So undetected. There are areas that you haven't studied, but those may be tested. And even the areas that you have studied, there can be errors. Now that way, I am putting here, there are undetected errors, uncorrected errors. Keep in a margin, setting performance materiality level at a lower level. And remember again, even for the performance materiality level, you can set for OML as well as both particular materiality level also, you can set a performance materiality level, right? So that is very, very important that you understand. Then I mentioned to you, there is something called trivial. And trivial means clearly insignificant, and usually auditors, if you ask from auditors, they will use percentage. For example, overall materiality level is 5 million, from that 1% I considered as trivial, and let's say that 1% is going to be, if you calculate, let's say it's 50,000. Now this 50,000 is trivial. Trivial means if I find error which is there is a reconciliation, there is an error in other receivable 10,000. Now, when you talk about material level of 5 million, 10,000 even don't talk about it. You clearly ignore. But if you find an error, let me to erase some of this. If you find an error which is say 100,000, now I am telling you these are the misstatements found in an audit. Now you have to tell me, right, inventory overstated 4 million, right, then error in other receivable, let's say this is a translation error, this was in foreign currency, there is some error which is 75,000, and then there is a prepayment, right, again overstated, and let's say this is 60,000. Now all these are overstatement, right? Now I am asking you, are you going to change the audit report of this company because our overall material level is 5 million, right? Now if I ask you, is inventory overstatement is material? Yeah, it's 4 million. It's in the border, you know, it's material. But are you going to change the opinion? No, because I have still margin up to 5 million, right? So this doesn't really warrant to change overall financial statement material level, to change the audit opinion. Then can I totally ignore 75,000? No, because I know if I add 75 plus 60 plus, there may be another 90, right? There may be another 120, right? There may be another various errors. If I add the total comes to about I didn't add the numbers, let's say 6.3 million. Now what auditor should tell the client? Look here, I cannot give an unmodified opinion. You have to correct these errors until I become comfortable. So then that is audit is now. This is where I said there can be uncorrected errors, all of that. But if I change the scenario, you found inventory overstatement to be 6 million. And what you do now, 6 million is above 5 million, and probably audit is going to conclude that their audit qualify inventory, right? Modified audit opinion on inventory because it's exceeding overall material level, right? So now you understood overall material level, particular material level, and why there is a level called trivial. Please write that level is helping above trivial. Please write a note. If there is a misstatement about trivial, auditor may aggregate in total, check the total, aggregate misstatement, aggregate the misstatement and see whether in total it's going to be material. So therefore, as a part of this session, as a part of this discussion, what you learn, if you look at in summary, we learn the definition of materiality, right? The information is material if its omission or misstatement is going to influence economic decision of users. In an audit, at the time of overall audit strategy, auditor will set material level for the financial statement as a whole, right? That can be applied to any account balances. However, if this is 5 million, right, there will be certain items where you have to have a low material level because that's required by laws and regulation or attention, like discontinued operation or is a key disclosure, then auditor will have a low material level. Now related party example like 100,000. So then in an exam question, very often you should know how to calculate material level. If you apply OML, usually is 5 to 10% of the profit. But remember, if profit is fluctuating, if company is NGO, the nature of the entity, you may use expenses as a percentage. You will use the funds received as a percentage, say 0.5% of funds received is material for the NGO. If it is a unit trust, based on the nature of the entity, you will decide that you are going to use the net asset. And then if ownership is totally debt-driven company, you may decide to use asset base of 1%. And there are some exam question you may want, if profit is very unusually, profit has changed from 9 million to 1 million, you may change the material level. You will calculate from profit, you will also put from revenue, and you give a suggestion. There are some questions like that as well, but usually remember what you learn now is applicable in many areas in financial statement. One, from CFO's angle to see, is something material. Is there a material misstatement in my accounts? From auditor's perspective, auditor is using this material level. One is to prepare a scorecard. This is called auditor's scorecard. Now, sometimes you can say this is summary of differences, summary of audit differences, SAD, right? So, summary of unadjusted differences. Now, these auditor is preparing a summary based on this definition called trivial to see whether total, right, in aggregate, whether the misstatement is going to exceed the overall material level. So, that's called trivial. Then another very sharp learning point is, what is performance material level? It is a material level which is set below the overall material level, right, for two purposes. One is to see what areas in audit, when audit is doing the risk assessment, any areas, right, which comes about 4 million, auditor will do particular attention, right? And in auditor selecting, testing also, in confirmation, whatever check-in, auditor knows that this 4 million is going to be very important. If there are errors detected, auditor will know that, this is my material level. Right? So, this is really helping auditor to plan the audit, to know where the risk and how to audit that. Why this 1 million margin is kept, I said, for two reasons. One is undetected, uncorrected. So, those are very salient learning point. And the last point that I want to tell you from audit perspective, right, when auditor is using material level, if I draw a circle here to say that this can't be a fixed number when you calculate a number for material level. My point here is that materiality level need to be revised as the new information comes, the revision as new information comes, and that can have implication. So, let me to explain that. So, please write the word revision. The circle is revision, right? So, originally auditor thought this company's risk is now see, why here you didn't ask this question. Of course, I didn't ask you a question. Now here I said auditor is using 80% and using 4 million as the performance material level for testing purpose. But later, now that means auditor may ignore. Now this material level will also help in auditor selecting sample, to what level auditor should test, all of that. Right now, sometimes auditor may decide, no, I am going to set a very low overall material level, like let's say it's 60%. So, you are bringing down it to from 5 million, say you are bringing it down to about 3 million, right? Now, why? Then you are doing more testing. Now, you understand this point, lower the materiality level, lower material level, more testing, because now you will select for your testing purpose items above 3 million. Now, if you further reduce, you are doing more testing. There is a relationship between materiality and level of testing. In other words, there can be a question if somebody asks, is there a relationship between materiality and audit risk? Higher the audit risk, auditor can set a lower material level and do more testing. The relationship is inverse. Right, negative, higher the material. Now see now when my material level, I am changing, right? Because if the risk is high, I am reducing my material level, right? So by reducing material level, I am going to do more testing. So therefore, remember, this is a matter of professional judgment. Now, what I want to say, during the audit, auditor thought this company is a good company, internal controls are very good. Right? And during the interim audit, auditor found that there are misstatements in this company and this is dangerous company. So then audit is thinking, when I do my final auditing or substantive procedure, I have to do more work now because I have found issues with internal control. Therefore, auditor may want to change the material level from earlier 4 million performance material level now to 3 million 3 million performance material level. Even auditor can of course revisit. Earlier auditor thought to use 5%, now auditor may decide, no, I want to further lower it. So like that, remember, materiality is something which is not fixed, but which can change as the new information comes. So now we can actually go and look at whatever I discussed through few slides, that if anything which is here unclear, I will show you all of these points, right, through the slides or your study text. As we always do, to wrap up, before we wrap up materiality session, I want to make sure that you understand everything in the study text. Especially I want to draw attention when we discuss this materiality level for particular classes. Now I can ask you some sharp question before we go through study text. What examiner can test? Question 1, definition of materiality level, right? In MCQ or wherever, what do you know that? Information is material if its omission or misstatement can influence the economic decision taken on the basis of financial statement. Answer. Then at overall audit strategy level, what auditor is going to decide, right? Auditor can decide financial materiality level, OML, materiality level for the financial statement as a whole, that 5% of profit before tax. And then there is something called particular materiality level. If you look at the pilot paper, there is a separate question asking what is an example for setting a particular materiality level. Now you have to say example like related party transaction, loss and regular, all that I'll show you in the study text. That's the second thing. Third thing, what are the benchmarks used in calculating OML? When to use them? Profit before tax you can use when the attention is on the profit. But then when there is a volatility, profit may not be a suitable basis. When the nature of the industry like NGO, right, ownership structure, debt driven, more debts, then asset may be appropriate, like that you should know. In addition, another sharp learning point, what is performance materiality level, right? So those things we will go through from the study text, you must know those. Now this is the definition, not the definition. This says materiality level for the financial statement as a whole. So auditor will decide this. So please write here OML, and then there is a performance materiality level, right? Must be calculated at the planning stage. And then also materiality level should be reviewed and revised as necessary. That also we learn. And now it is going to detail planning and performing, how audit is going to use the materiality level, right? And so the definition for materiality level, so there is no definition in 320. I clearly told you definition is coming from LKS 1, right? And usually when we look at materiality level, this is, I actually explained to you definition, but in the study text, when we look at misstatement, right, and I told you sometimes it's individually, sometimes when we aggregate together, I showed you a list of things, that's called aggregation. When you add together, that is going to influence the economic decision of users. Then the judgment about whether something is material or not, right, to be made in light of the surrounding circumstances and are affected by both size as well as nature of the misstatement, or both, right? This word circumstances and nature, without example all these words are useless. Please write example, related party transaction, change in accounting policy, regulatory thing like central bank, those are by nature material. Then judgment about matters that are material are based on the consideration of, I said, common financial statement uses, right? So that is there in the definition itself. I told you that general purpose financial statement. Then it says practically because of the materiality level, right, it is important in auditor identify material errors, omission or misstatement based on both the size is the quantity, nature is the quality of the misstatement, both need to be looked at. For example, lack of disclosure regarding, now see my example, litigation is material, right? Some misstatement may fall under specific benchmark but are still considered material overall due to qualitative factors. So please write, this is the example that I mentioned to you. Actually in the study text, ideally they should have written this as particular material level. Please write very clearly in your note, this is called particular material level. And I can go to the standard and show you these sections are for the heading particular material level. So then what is particular material level? Because I said one size that 5 million you can't apply to all, no, some areas you have to have a lower material level. Especially what type of areas, which I already mentioned in my diagram, right? One is laws and regulation requires, certain areas are more sensitive. Example, related party transaction, directors remuneration. Some I said key disclosures in a bank. I mentioned to you capital adequacy ratio. If you take a pharmaceutical industry, research and development, things like that, R&D in a pharmaceutical company. And then we have to also look at, for particular material level, the areas, some areas require specific attention, right? Attention is focus, right? See, the word attention is given to certain aspects, certain areas of the company, right? I mentioned to you discontinued operation, or it's a newly acquired business. So more attention is going, you will set a lower material level, because end of the day, it is the decision of users. And materiality is a matter of professional judgment. The higher the risk, now this is very, very important for MCQs. Higher the risk, lower the material level. And then if you look at usually what is the use of material level in an audit, how many items, where to check, and sample selection, sampling techniques, and whether this audit opinion, all of that I explained to you. I am sure that is very clear to you. And then this is performance material level. So this is the other concept that we discuss. And anyway, this topic says determining and calculating material level. That is one topic. How to calculate material level, right? The other topic is how to calculate performance material level at the planning stage. That is for RAP and FAP, like we discussed. During the audit, auditor shall establish material level for the financial statement as a whole. So highlight, and also performance material level. So as a whole one, we discuss. As a whole means you can use a benchmark using profit or whatever. It's based on auditor's professional judgment. A percentage can be applied to a chosen benchmark, right? And you remember in my diagram, whether you select profit, revenue, gross profit, depends on 5 factors, the elements that you are looking. Is it profit, revenue, asset, etc.? And then where the user's focus is going to. And then I said the fluctuations of the measure, volatility, and then nature of the entity, whether it is an NGO or a bank or a retail, right? And then ownership structure. Those 5 things are listed here. So you can highlight those 5 that we already learned, right? So what are these 5 things? Where to apply the percentage, you have to look at what the elements we are looking. These are the elements that I explained to you, and where the user's attention is focused, nature of the entity, industry, ownership structure, volatility. Now study text doesn't explain this, but I explained to you in very detail meaning of all of this. And these percentages also you have to be really mindful. Usually this is what is being very often used, and all other things, the revenue, gross profit the same, 1 to 2 total asset, this and this, they have put the after tax as well, right? But usually in many cases profit before tax is taken, right? It's based on the business, and I explained to you how it is there. I think there is some explanation in the study text in the next page. The percentage of guideline asset profits that are commonly used to material level must be handled with care. Auditor must bear in mind focus of the company. So if you go to next page, I think there are some explanation. Now this one, in some cases, right, post-tax profit is a key figure in financial statement as the level of dividends. Now see the why profit is important, because dividend declaration, because this is what owners are going to get, and that is a key one. And owner managed businesses, if owners are paid a salary, now see this is your owner managed business, and owner is going to get a big salary. Now after deducting that salary, profit is nothing. So then better you calculate materiality before that, right? Indifferent to dividends, the key profit figure stands higher in the statement of profit or loss. Say at gross profit level it is higher. Alternatively, in this situation, the auditor should consider a figure that doesn't appear in the P&L, right? Now that means profit before salary and benefit, because that salary and benefit can be a really significant matter. So you may have to do some adjustment. Some companies are asset driven, right, rather than profit. Good example is, I said unit trust. In addition, expenses driven companies like charities, right, then the cost is driving factor for materiality level. And in addition, while the rules or guidelines are helpful for the auditor in assessing the materiality levels, so this is based on the nature, judgment, all of that. And what is not explained here in detail is that when there are fluctuations like loss in last year, profit in this year, then you have to look at, you can't use the profit because it's fluctuating. So all of those, I think now with your note you understand all what I said. Then I mentioned to you why performance materiality level is used, right? Consider what happens. Now this is that my example, if you are only going to get 50 marks, you will get below 50. In audit, there can be two things that can go wrong if auditor just apply the last materiality level. So what are the two things that can go wrong? Undetected errors, uncorrected errors. So then usually it is defined at a lower level, right? So if audit is only going to apply this OML directly to different account balances without a performance materiality level, there can be what? Number of balances untested, right? Balances because they are immaterial, right? However, number of errors that could exist in this untested balance. So there can be misstatement that in total can be material. For this reason, audit is going to have a performance materiality level which are lower than the materiality level for the financial statement as a whole, and this means lower threshold is applied, right? And based on the risk also, this percentage should be decided, right? And then if you look at performance materiality level definition, is the amount set by the auditor at less than the materiality level as a whole to reduce appropriately to low level probability that one is the total of uncorrected misstatement and undetected misstatement exceed the materiality level as a whole. That's why I said you can write as a margin. My example, 5 million, 4 million, 1 million is a margin for both of these, right? If applicable, performance materiality level refer to the amount set by the audit at less than the materiality level for particular classes of transaction. Now see, I think in study text this part was not in the above, but it's here appearing, right? So now this performance materiality level can also be set to, now this is the particular materiality level. So there also you can set that. And don't worry, I am definitely going to do a case study. I will in the next session, when I do audit planning, I take a case study that involves material calculation by looking both P&L and profit based on your revision kit. And then definitely we are going to do many questions so that you apply this theory in practice and thereby you excel, right? So this is performance materiality level, which is set at a lower level than the overall materiality level, right? However, an even lower level, so some balances. Now this is the particular materiality level, right? There will be certain balances, transaction disclosures where auditor will take qualitative factors and decide the materiality level. Please write, this is called particular materiality level. So why performance materiality level is used for RAP and FAP? One is as you can see, determining performance materiality level is very much dependent on auditor's judgment about nature and extent of misstatement, last year misstatement, auditor's understanding of the entity and risk. So what these 3 bullet points says, I said in my example, I use 5 million and use 80%, 20% cut. But if you know based on the last year there are more issues in this company, this is a dangerous company, there are a lot of high risk, then you want to reduce this performance materiality level not to the 4 million but to 3 million. So then you do more testing to reduce the risk. And the other point that I explained to you is that material level has to be revised during the audit as the new information comes. So that this point, right, revised as a whole, if auditor becomes aware about the information during the audit, that would have been cause auditor to have determined a different level at the planning stage, because new information says these controls are weak. Now, if the auditor concludes that a lower amount of material level for the financial statement as a whole is appropriate, auditor must determine. So, which means both OML as performance material level need to be revised, right, and that is going to affect nature, time and extent of further audit procedures, right. Revision of material level might be required. For example, now this example is very important. If during the audit it appears that actual results are going to be significantly different, which means auditor thought controls are working, now it is not working, then auditor may change the material level to do more substantive procedure, and that is a big point that I now explained to you, because change in material level means you are taking into account the new risk that you identified. As a result, you will do more work, right. Then, as usual in auditing, everything has to be documented. There is a separate auditing standard on documentation, because if unless everything in auditor's file, when a regulator comes and check auditor's file, auditor can't show I have applied material level standard, materiality standard. So therefore, in auditor's file, auditor should show this is how I calculated OML, PM, everything. So auditor has to show how auditor has calculated OML, how auditor has calculated. Now this is the one, particular material level. Now in my diagram, if you remember, I put initially two things at the overall stage, that is OML and particular material level, and then performance, and then revision. So these are the four things that need to be documented. So I think with that we bring this section to a closure, and as I told you, we are going to discuss case study that involve material calculation plus many questions. Thank you.